Good afternoon, this is Mike Bartleson, the Bear Market Investor, the market update for February 17, 2011. We're here looking at the S&P 500 stock index in a 30-minute time frame. We're also going to be zooming in to give you more granularity into the wave structure shortly. First, let's go ahead and take a look at the wave structure as I laid it out in the last video on February 14. That proposed a different subdivisional structure here within wave 5 of 5 of C. So we concluded wave 4 of 5 of C at this level in the S&P 500. From there, we had a first wave up, a second wave down, third wave up, fourth wave triangle, and then we're working on an extended fifth wave right here at this point in time. That would probably have us conclude the third of the fifth wave that started at this level right here at today's peak. Then we would see a small fourth wave pullback and then a fifth wave thrust onto a new high. Under the original interpretation within wave 5 of 5 of C, that would have us conclude wave 1 here, wave 2 here, wave 3 here. We would then conclude wave 4 here, or wave 4 in the form of a triangle at these levels right in here. And from there, we could have had it subdivide further, or we could be in an ending diagonal. However, I think it's probably more likely that we're seeing the wave structure that I laid out to you on February 14. That would have us conclude a fourth wave triangle at this level and be working on that fifth wave still. But there are interpretations, as I wanted to say, that would have us conclude the rally at today's peak. I just think it's a little less probable. Now let's go ahead and zoom in to the 15-minute chart. Now the 15-minute chart here is showing you the breakout of that fourth wave triangle. Would have us concluding the first wave up here, second wave down, and then probably the third wave up. Of this third wave, this is the way that I would break this down. We had a first wave up, second wave down, third wave up. We had probably a fourth wave triangle, and then we had a fifth wave. And that would have concluded today. But that would suggest then we'll see a small pullback tomorrow on the order of several points before thrusting on to a new high later on, probably concluding tomorrow or on Monday. Ideally, I'd like to see this thing conclude tomorrow because of Fibonacci time relationships, other cycles that I see, things of that nature. But, give or take just a little bit, it's fine. Wave structure looks pretty good here under any of the various interpretations that I've laid out for you for subdivisional wave structure within wave 5 of 5 of C. So again, we could have concluded today. I just think it's more probable that we will conclude tomorrow or on Monday. Let's wait and see what happens, but do be on guard regardless. It is possible we topped. The best way to see that we have topped is to start breaking down this rising wedge pattern in the shorter term here, breaking below this fourth wave low, and then on to break lower levels of support as well. Let's go ahead and take a look at the volatility index to see what's happened since the last video on February 14. We're looking at the daily time frame of the volatility index, and what we can see from the last video that we did here with the reversal candlestick that we put on the 14th, we're not showing quite as much weakness as we were before in the volatility index. However, we're not seeing the surge to the upside of volatility yet either. We're continuing to trade net sideways between resistance and support. And we will probably continue to do so until the final subdivisions are put in within the Elliott wave structure of the S&P 500. Hopefully that happens within the next couple days. Have a great night. Please rate the video if you would. I would appreciate it.